Hey, what's going on, everybody? It's your boy Deonte Burden, aka Mr. Short Dollar himself. Got a quick live feed I want to talk to you guys about tonight, and it's in regards credit. I entitled the live stream tonight. We're talking about you have a 700 credit score and you still can't get a loan. Here's the deal: you got a lot of people out there with a lot of videos, a lot of information telling you, how to get your credit up. We have people come to me all the time in regards to want to be able to acquire different things, get their house, get a car, start a new business up, and they had the same perspective that they have issues with their credit, and once they get their credit straight, they'll be able to do certain things, which may be possible. But what happens a lot of times is because you got all these different programs. I help people got credit fixers all on the internet. People tell you what to do, the videos in regards to how to boost your business credit up and do different things. And I know you do have a lot of financial institutions that will be pretty flexible in regards to acquiring business loans. Will help you a little bit more lenient in regards to if you have credit challenges to be able to give you business loans or a different kind of credit. But usually it's never just based off of your credit score. Again, before we go any further, I am Deonte Burden, aka Mr. Short Dollar himself. You guys know Mr. Short Dollar. We talk about personal finance, business, entrepreneurship, and investing. Right now, we're streaming live on Facebook and YouTube. And to stay updated on most of the on all the information we have on Mr. Short Dollar, go to the YouTube channel. That's where we house all our videos. I think we got close to 300 videos right now on Mr. Short Dollar. Easy thing to do if you're looking at us on YouTube, hit that dollar sign in the bottom right hand corner. Got the links in the live stream for you guys to hit it. If I'm always looking to my left, guy, excuse me, bear with me. That's what my monitor is. So if you look like why does he keep looking to the left? That's why I have it set up like that. And also be looking to see if you guys got any comments or anything filling out. But again, tonight we're talking about if you have a 700 credit score, you still can't get a loan, right? Now, one of the things that I think a lot of times people don't get in regards to when you're trying to get business funding or get personal loans, people avoid probably the number one thing I tell people to do if you're looking to get any kind of access to capital. And that's try to, number one, just go to the bank or the people that you're trying to get a loan from, have a conversation with them. typically people want to do the easiest thing: go online, apply, get a yay or nay, and uh, go from there. If they get approved, they may get a big chunk of something, which is usually not the case. Usually they maybe get like a starter, depending on what your credit is. But even still, you'll never get as much as you can if you have a conversation with somebody. Um, you go apply online, get what you're pre-approved for, and roll from there. And every now and then you may try to go online and ask for an increase. Um, I'm totally against that. I'm all about, personal way of doing business. Now, when we start trying to make sales and do things from being effective, being efficient, that's a whole different thing. We start talking about getting access to capital, getting loans. I'm totally about relationships. It's a totally different thing when you can go put your eyes on somebody can look at you face to face, you trying to get a loan as opposed to you being part of a stack of papers on somebody's desk. So the number one thing I always tell people, get access to capital when you don't need it. The worst thing you can try to do is be in business, and when you need to try to expand or something, that's when you get a loan. A lot of times people say that I don't want to get a loan, I don't want to do it. There's nothing wrong with getting a loan. It's something wrong with not paying people back. I know we do a lot of videos in regards to acquiring grants, but I try to get people to understand for every one grant that you get, you could probably get 50 to 100 loans. I mean, I'm probably be more close with the 100 loans. Grants are that hard to get by because they're free. So it's a bigger pool of people that's applying for it. A lot of times people get dejected and say that I apply for these different grants and never get them. I mean, not something funny. It's a lot of y'all applying for them because you have to pay it back. That's why. There's nothing you done wrong. There's nothing wrong with the opportunity. It's just that a lot of people are applying for it. But to get actually borrow the money for a business, that's the thing that a lot of people are just, hesitant about. I don't want to owe anybody or you just got to be disciplined, paying people back. And again, you'll never be able to grow and expand your business the proper way if you don't understand the whole power of leverage, right? You guys, I got an undergrad in finance, so that whole capital asset pricing model, full leverage, those kind of concepts, I'm well in depth with them because that's what I went to school for. So I'm always big on using leverage to be able to expand and grow your particular business. But it goes back again to having those relationships where you can go in and just say, hey, man, this is Deonte. I got an opportunity coming up. I need you guys to kind of help me out. What can we do? And how do you do that? I always tell people to, number one, make the appointment and set up to go talk to the business banker, right? Go set up and sit in front of them, him or her, let them feel your spirit, you feel theirs. If they feel like they don't want to talk to you or deal with you, I mean, that's a screener for you. Go to another bank. But let them know what you're trying to do. Let them tell you what they're looking for. And then from that point, you guys can have some kind of plan of action. Now, the problem comes up a lot of times. People try to get access to capital and get funded when they need the money. But at that point, is either you can get it or don't get it, or you just settle for what you can get. Most of the time when you settle for what you can get, you're going to get something that's going to be not necessarily beneficial to you. It's going to be probably something with not unfavorable terms, unfavorable rates, just not a good product for you. But when you're down and you sit there and have them relationships with people, now you try to get access to capital, okay? And what I want to just do a quick little rundown in regards to, because you have a lot of people out here that break the net to increase their credit score, but when they go in there to apply for the loan, they still get denied. Like, well, what's going on? This bank is tripping because I have everything that I think I need to have, and I'm still getting denied for the loan. So I'm going to go through a quick little rundown with you guys in regards to what banks generally need in regards to that. Again, most banks may vary in regards to what they typically ask for, but on average, most banks are going to be pretty much looking at the same thing from the person side and the business side, okay? Personally, most banks look for two things. They're looking at your income in relation to everything and your credit score. They're looking at the income and the credit score. This credit score, that's pretty much that barometer to see, how you stack up, if you're going to pay them back or not. Some may be a little bit more lenient. They may be lower than 700. Some of them may want more than 700. Just depends on what you're trying to get, be it that being a credit card, installment loan, mortgage, car note, whatever. The flexibility may change. The actual income be based where they're looking at, do you have the capacity? Because when they run your credit score, they're looking at how much the combination of the minimum monthly payments in relation to how much income you have. Again, we're going to go to that. They want to make sure it's at 30%. And that's what they're looking at, what you call your DTI or your debt to income ratio. And again, they're looking at in relation to the actual monthly payments that you're putting out. And this is very, very critical. I think this is the part that a lot of people miss, right? That DTI, the debt to income ratio, they're looking at, when they pull that credit report, they're looking at the total of those monthly payments that you're paying out in relation to how much you're making. And they don't want to be more than 30%. Kind of like typically when you just say you try to get an apartment or something, and they want you to make sure you're making 3 times the rent. It's the same concept. They want you to make sure that whatever that you're paying out on a monthly basis in regards to your debt is not taking no more than a third of your income. So that's something to kind of keep in mind. That's very crucial, because you can have a high credit score, but you're still paying out a lot of money in relation to the amount of money that you're making in. So again, we want to make sure we're below 30% in regards to that debt income. Again, that's divided your monthly your monthly payments that you have coming out, and that's going to show on your credit report. Easily, you can pull your Experian, Equifax, TransUnion. Where we live in now, you can have one of those systems or website where you can see all 3 of them at the same time. Divide that by your income. Make sure it's no more than 30%. Okay, that's the personal. We're looking at income and the credit score. We go to the business loans. It's a little different, right? And typically, if on the personal side, let me backtrack. If one of those 2 is off, you probably get denied for a loan, right? Kind of want to tip both of them to be a certain way. But if they don't follow the criteria that they want, and if they vary from lending institution to lending institution, they probably get denied for it. But when we go to the business side, it's a little different. Generally, what they look for in the business loan, they're looking at your income, they're looking at your credit score, they're looking at the industry you're in, they're also looking at what kind of collateral you have, and they're looking at the actual experience you have in that particular business, okay? Depending on who the lender is, they'll put more weight on different factors with that, okay? So it's not going to be, this is most important, that is most important. They'll put different weights on depending on what the actual, who the lender is and what it's for, right? So again, they're looking at income, credit score, industry, collateral, and experience, right? So again, we're going back to that DTI, still looking at to make sure that's under 30%. We start looking at the industry. You have some industry that are a little bit more volatile than others. We start thinking about clubs, restaurants, ones that have a high closing rate, ones don't last too long. Those are kind of hard to get loans for. You got to come to the table with other things. Again, when we talk about just having collateral, what can you put up? Some, it may not be that much risk into it. Everything's fine. You're making a decent amount of money. Y'all got some holding set up. They may not acquire collateral, but be prepared if you're in a riskier industry or some of the other things that you bring to the table between those 5 factors a little bit off. Be prepared to be asked to have some kind of collateral set up. Also, the actual experience you got, or the experience that the team that you're bringing in, that maybe on your board of directors or your management team, what kind of experience they got. This is something that's totally new to this person. It is something where he may be new to it, but he has some great mentors, people that's on deck. How strong experience-wise with his team. All this stuff gets taken into consideration in regards to you getting at a business loan. And in between those 5, the income, credit score, industry, collateral, experience, if 2 of those use off, you're probably going to get denied for the loan. Okay, a lot of times people tell you what you need to do to apply for a loan. Again, I've secured several SBA loans this prior to pandemic, 6-figure loans. So I actually know the scrutiny and the red tape that goes through that. Getting an SBA loan was probably the most stringent loan you can get, getting a government-backed loan. But even just dealing with banks, and I've got loans from all the major banks. Most of the times they're going to actually be kind of finicky, especially with that 700 credit score. Again, but they may be kind of a little lenient if one thing is pretty good and depending on what they put weight on, right? Between those 5 factors. But it still goes down to the relationship. At the end of the day, if a person knows you, they may be a whole lot more flexible in regards to working something out with you. Again, you may not necessarily get the initial loan amount that you have, but you can actually get something, get your foot in the door, come back 3 to 6 months later and get something bumped up. But again, it's all about relationships. I can't stress to you enough. You want to make sure that you schedule at least a quarterly meeting with your bank, the lending manager or whoever the loan banker, whoever at your particular bank. You need to have some kind of quarterly meetings with them. So they're doing some kind of assessment. They're not going to run you credit all the time. Just have some kind of conversations to do that. Because again, when we in business and opportunities come, we want to make sure we can seize opportunities. A couple products I just want to run by you guys real quick. We started talking about just business loan, your straight business loan. And I got a video coming out on Mr. Short Dollar in regards to breaking down business loan, business lines of credit, business credit cards, those things, to kind of get like a little one-on-one on everything. But just like your regular business loan, which may be something that's set on a loan that's set for a certain dollar amount over a certain period of time or terms at a certain rate. Just say you got a $10,000 loan over 5 years, you're paying $100 a month for that, right? That's just your basic business loan, okay? We start looking at another thing, which is like a business line of credit. Business line of credit, you may ask for a $10,000 business line of credit. At any point in time, you can just use that certain amount of that money. So you're not paying interest or payments on the whole $10,000. But if you use $1,000 to buy some equipment, you'll be making payments on that $1,000 till it's paid back. But you still have $9,000 available to you. That's very crucial. That's a very crucial product to have, depending on what type of business you have, especially in things like restaurants, transportation, where you actually need access to capital. But you always want to have more than what you need. Great products, so you're not paying more for something that you already got access to. That's a very good product to have. Another one is like a factoring loan, and I have a video talk about a lot more different lending products to kind of make you guys abreast of it. But these are kind of like basic business loans. I think a lot of startup businesses need to be aware of. Okay, you talk about the term loan, the line of credit, but the third one is of course called a factoring loan. A factoring loan is also recognized as a receivable loan. And what happens, a lender that deals with this, and it's kind of like alternative financing or a different way of financing. They look at the actual contracts you got coming in. They won't necessarily, unless it's a set amount that's off your regular billing, they really don't do it. But most times you got a contract, just say with the city government, Comcast, or any like major vendor as set up. This is what you're getting each month. They can actually give you a loan based off the receivables. But what happens is they'll actually get the money from the contract going to them, and they'll cut you back the residual, which is probably only going to take maybe, I don't even say 10% of your the payment, but it's pretty much straightforward with that. But they give you an opportunity, because a lot of times we have companies like service contracts, maybe like a Comcast. You got a cleaning company where you're actually doing the work and building it, and may not get your money or get the invoice paid for 30 to 45 days. You still got to make payroll. You still got other utility bills or different kind of things you got to get done. So you need to have some kind of access to capital. And that's what a factoring loan does. They're just fronting you the money based on the receivables of the contract you already have. So those kind of things, again, we're going to have videos coming down the pipe to kind of give you guys a better explanation for it. But I just want to have that discussion with you guys tonight, because you got a lot of people breaking their neck to get their credit scores up to try to get these loans. But when they sit down in front of these lenders or they put their information in the bank, they still get denied. And they're bitter because, like, hey, I had a good credit score. I don't know why I got denied. This is why. That DTI is off, experience is off, the industry is crazy. Different things that come to play that you don't necessarily know. And because you don't have a relationship with the banker where you can call, hey, man, what's going on? What's the issue? Because at the end of the day, I can tell you this. If you have a relationship with the banker and a loan get denied, you can make a phone call, and then they can make a phone call too if you know each other. But if you're just putting stuff into a computer and, praying on to keep your fingers crossed, hell, any damn thing can happen. So I want you guys to just make sure you're doing that. Again, how to pick what bank you want. Just go talk to about 4 or 5 different banks, have conversations. I'm such and such. This is where I'm at. This is where I want to be. How can you help me? Remember, banks get paid off what? Interest payments and fees. Interest payment and fees. So whatever, they're making off the interest payment or whatever they charge in late fees, setup fees, or whatever kind of fee, that's how they get paid. So it behooves them to do that. If the lender does not want to talk to you, to make you feel uncomfortable, I say again, that's your screening rule. Leave them the hell alone. Find you one that's going to deal with you, right? Some may be different, more flexible with depending on what industry you are. Maybe more flexible depending if you're a startup, mid-size, or major corporation. It just varies. But that's when you just do your due diligence and meet. And it's kind of hard to take advice from other people sometimes to say, hey, listen, what bank do you bank with? And it may be good for them in that particular business, but it may not necessarily be good for you, right? So a good point with this, a friend of mine has an account with a credit union, and they had a personal account with them. They trying to move to the business account with them, and they don't have mobile check processing. So what's happening is they got a lot of their customers that are paying them by check, and they got to just constantly walk down to a damn bank and make deposits in 2021. It says just be able to take a picture, but that bank does not have mobile check processing for business accounts, which is damn astonishing. But you'll be surprised how many banks haven't went to the went further than the digital age over time. You know, some they have different things, but it would shock you if you knew how many banks can't necessarily be as inefficient or efficient or effective as others. But again, that's a screening tool for you to find out. Have them conversations. Let them know what you're trying to get. And one golden rule I want to give you guys: whenever you're applying for any kind of loan, regardless what it is, always ask for more money than you need, way more money than you need. Okay, because they're always going to give you less than what you need. So if you need $5,000, don't have $5,000. You need $5,000, that's $15,000 or $20,000, and they'll probably give you 10 or 5 grand. It's just a little rule of thumb with that. Okay, always ask for more than what you want because they're always going to come down. You go and ask for 5, they're going to give you $250 love card, something like that. So we don't need that. But listen, guys, I just wanted that quick discussion with you guys tonight in regards to what I was saying in regard having that 700 credit score, because I don't want you beating the pavement, paying down debt, get your credit score to a certain point, feeling real good, poking your chest out, going to Atlanta, you still getting denied, and it can't happen. So kind of keep those factors that I had in mind, guys. Listen, make sure you subscribe to the YouTube channel, spread the word of the channel. Got a lot of great information coming out. Let anybody know that we got 3 live grants coming on right now with different entrepreneurs. Got another one, I think may come out tomorrow or Thursday. So be on the lookout for that. But as always, guys, hit the dollar sign in the bottom right hand corner. Make sure you subscribe to the channel. Go to Miss Short Dog where all the videos are set up at. And best of luck, guys. All the contact information, all the social media platform links in the description section of the video. So don't hesitate to get in contact with us if you got any questions. If you need further assistance, hey, feel free to book an appointment. The link to book an appointment is there as well. And listen, guys, I look forward to, answering any questions. I don't see nobody came in on the live chat tonight. But if you have any questions, feel free to reach out to us later on, okay? Love you guys. Be safe out there and take care.